A new law just passed. It could change the future of money forever. Stable currency, long debated and dismissed as niche, has now become law. This isn't a headline from a crypto blog. This is the new reality. And the implications? Massive for the US dollar, the Federal Reserve, and the global economy. So what's really going on? Why now? And what does this mean for your money? Let's break it down. Congress just passed legislation formally recognizing stable currency as legal and regulated financial infrastructure. The bill doesn't just give stablecoins legitimacy. It mandates frameworks for how digital versions of fiat currency must be backed, reported, and protected. The goal? Restore confidence. In an era of bank collapses, volatile markets, and digital disruption, lawmakers want a system where digital dollars don't crash and burn like meme coins. Every unit must be fully backed, dollar for dollar, by reserves like cash or U.S. Treasuries. And this isn't just about tech. It's a signal that Washington is finally taking the future of money seriously. So why is this happening now? Because pressure is mounting from every direction. On one side, you have major corporations like PayPal, BlackRock, and J.P. Morgan experimenting with tokenized cash and blockchain settlements. On the other, global rivals like China are pushing forward with their own central bank digital currencies. If the U.S. doesn't move fast, it risks losing its financial dominance. Then there's the domestic reality. Americans are frustrated. Inflation has eaten away at purchasing power. Banks have wobbled. Trust in traditional finance is at a low. A stable digital currency, fully regulated, offers an appealing alternative. Fast, cheap, transparent. The Fed's role just got complicated. Here's where it gets tricky. The Federal Reserve. By embracing stable currency under law, the Fed may now need to coexist with a parallel system of money. While central banks still control interest rates and monetary supply, private stablecoin issuers will now operate within the formal economy. Some economists worry this could weaken the Fed's influence. If people start using stablecoins to bypass banks or move money across borders freely, traditional monetary policy tools could lose their edge. Others argue this might strengthen the Fed, giving it real-time data and better control in a digitized system. Either way, the status quo is over. Who stands to win? Let's talk winners. First, financial tech companies. Circle, Coinbase, PayPal, they now have the regulatory clarity to scale legally and safely. Second, the U.S. economy. This move solidifies the dollar's lead in the race for digital finance, especially against China's yuan. Third, consumers. Faster payments, cheaper fees, instant settlement, even on weekends. That's the promise. And long-term? It could reduce our reliance on outdated banking rails like ACH or SWIFT, which often take days. But not everyone is cheering. Skeptics warn that institutionalizing stablecoins creates systemic risk. What if a major issuer fails? What happens if reserves are mismanaged? What if foreign actors exploit loopholes? There's also the fear of fragmentation. If too many private coins emerge, you might end up with dollar islands that don't talk to each other, defeating the purpose of stability. And most importantly, privacy. If digital currency becomes the default, how much of your financial activity will be tracked? These are real questions, and this law is just the beginning. Final thoughts. We're entering a new chapter in economic history. The dollar is going digital, but with legal guardrails. This bill may seem like a niche financial move, but it's a seismic shift. It opens the door to programmable money, real-time macro policy, and a world where financial inclusion may be more accessible than ever. Or, it could be the first step toward a surveillance economy and fragmented monetary control. Only time will tell. But one thing is certain. The money you use tomorrow will not look like the money you use today. If you enjoyed this video, like and subscribe to stay ahead of macroeconomic shifts, fintech trends, and digital currency updates.